try to get back to it as soon as I get it. Okay? Let's start with the general biggest update. So as we speak currently, we are basically trading at $89,918. We are basically getting rejected off this 4 hour resistance at 40,500. The range, the smaller range basically at this time, it is in between from $38,500 region to $40,500 region. And the bigger range in play that is $30,500 region back to $44,500 region. So, uh, you guys all know that as soon as the US market opens, we have this sort of pattern going on from the last few weeks. As soon as the ETF got approved, we have this sort of pattern going on where as soon as the US market opens, we have this huge sell-off coming in. And similar is the case here as well. Also, we were sitting at the 4 hour resistance also. Yesterday, we were sitting at the 38.5K support area. The important thing that you basically need to know is that the first thing is that your 38.5K support area has not been retested. This was basically the first retest of 38.5K support area. Apart from that, this is a very strong support area, and you can imagine this considering the fact that it took us some time to break above this region. So we had multiple rejections of this 38.5K resistance area, as you can see, the first rejection, the second rejection, the third rejection, and finally we broke above. And I did mention this in quite a few updates as well that 38.5 area, this has not been retested. Again, there is no hard fast rule that a support or a newly created region, it could be a support, it could be resistance, and it needs to be retested. But yeah, this was basically an untested region. And I'm always telling people that the first retest it is always your single best opportunity to take a long or a short trip. By the time you have second retest, by the time you have third retest, your chances of again this is a game of probabilities. This is not a game of certainty. So by the time you have like second retest, third retest, the chances of winning they might be reduced to, or the chances of rejection or bounce they might be reduced to somewhere around like 50%. And if you have a 50% probability of winning from a setup, then you should probably not be entering into that setup. Okay, so this was first retest, quite an important one. And apart from the fact that this was a very major support area, there is nothing much interesting about this region. Whenever I'm talking about a certain region, it's not just a static or static support resistance I'm looking at. And by the way, for those who don't know, there are two major categories of support and resistance. The first one is a static support and resistance, and all the other things, for example, trend lines, revamp, volume weighted average price, exponential moving averages, all these things fall into the category of dynamic support and resistance. I'm not someone who is basically using, some buy sell indicators. I do have a lot many indicators applied on my chart. But for example, I'm using EMAs, for example, I'm using the volume weighted average price, but the majority of these indicators that I use, they are basically used by me in their true essence. So whenever I'm using exponential moving averages, they are used in the same way as a dynamic support and resistance. So apart from this area being a very strong horizontal support, there is nothing much interesting about this region. Luckily, we had a bounce from this area. As you can see, it was a peak touch of 38.6K, 38,550 region. But then we have the smaller range playing out sort of where we have the rejection happening from $40,500 region. Again, let's talk about what exactly happened after the ETF approval. So we all agree on this fact that ETF basically was a sell then use event. And also, if you would read the headlines, we have scale basically selling their shares, which means that as soon as ETF got approved, majority of the other big companies, for example, BlackRock, for example, Fidelity, ARC 21, iShares, etc., majority of these financial institutions, they had applied for Bitcoin spot ETF to Securities and Exchange Commission of United States. So majority of these big financial institutions they wanted to have a spot ETF application getting approved. As soon as it got approved, Grayscale also, which was previously the only major financial institution which was trading in terms of Bitcoin, and MicroStrategy also is one, but Grayscale basically was the only one that was directly involved. They had also filed an application to Securities and Exchange Commission that they wanted to convert their Grayscale, the GBTC shares into spot ETFs. And as soon as SEC basically approved this application for all the applicants, Grayscale's application for the conversion of GBTC into spot ETF also got approved. And as soon as it got approved, the majority of the investors who had invested in GBTC, they basically got the leverage that they could redeem their shares. And this is what exactly is happening. If you would look at the balance sheet of what exactly are the net inflows and net outflows, you would see that there are like, in the last 1 or 2 weeks, ever since ETF got approved in 10th of January, on 10th of January, we have like $2 billion of outflows, right? From Bitcoin. So $2 billion of Bitcoin they have been sold out. This is the net outflow, and then we have the net inflow as well. And $1 billion of spot, $1 billion have been invested into Bitcoin ever since the ETF got approved. The majority of that has been invested in the spot ETF of Fidelity, and then we have BlackRock as well, and then other major institutions. Okay, so another big reason that we must be talking about, you can never be 100% sure that when this selling is going to end. Basically, it could end at 30.5, 38.5k. It could end at 34k level as well. Now, just to give you a reminder, I have mentioned this in quite a few updates as well, that $34,500 region to $33,500 region, this is an extremely important region. If you would look at the 3 months heat map, liquidation heat map of Bitcoin, you would see that the major liquidation, the first major liquidation event, it was supposed to happen at $40,000. And this is what exactly we saw happening on 3rd of January. So on 3rd of January, when you saw this massive dump happening, this was major liquidation event at $41,000 region to $40,000 region. And the second important liquidation event, and mind you, this one that would be happening at $34,500 region, this is far more bigger than the $40,000 region. So basically, in this liquidity and liquidation event, this is a very important concept, and this is very misunderstood concept also, and very complex subject also. I wouldn't get into the extreme details of that, but just to give you a brief idea, majority of the people who opened the long position somewhere around like $35,000, $34,000, $33,000 region. They basically are, you can call them retail investor, whatever you like to call them. They basically have not taken profits. So the major liquidation event, people who have their open long positions in Bitcoin and who have not taken profits, they were basically out of sheer amount of greed, they did not take profit. Major amount of these people, they are going to be liquidated somewhere around $34,500. And we all agree on the fact that the market is always searching for liquidity, right? Again, there is a reason for that. The market makers, they basically want to get their orders, the big orders, they want to get filled. And that is why, $34,500 region, it's an extremely important region. Okay, I'm not much interested. Again, this is a very important support of 38.5k, but still, I'm not very much interested in this region because I know that this May $34,500 region may present a much better opportunity to buy at a cheaper rate. Okay, so if you are someone who is invested in this altcoin, if you're invested in Solana, Render, Injective, the majority of these strong altcoins, then you should not be worried about it because that is the major benefit of investing in altcoins. You don't have to worry about your position getting liquidated. Again, it's not something that you have to hold on to your dear life, obviously. But yeah, you can imagine that if it goes below, if the prices go below $31,000 region, if you start closing below $31,000 region, then obviously the bulls need to be a little bit afraid of what exactly is happening. But at this moment, the news is that the grayscale, they have basically sold out somewhere around like $2 billion of the GBTC shares. They have converted them. The majority of the investors, they have redeemed their assets, and out of this $2 billion outflow, FTX is involved. FTX is responsible for $1 billion of outflow. So FTX, they were major investors in Grayscale GBTC shares. And as soon as ETF got approved, they also got the license to sell, to basically liquidate their assets. And FTX has already sold $1 billion of Bitcoin, right? In the past few weeks. And nobody knows, Grayscale is still the single largest entity on earth that holds the most amount of Bitcoin. They hold somewhere around like 650,000 Bitcoins, and they have sold like 100,000 already. And so at this moment, as we speak, they hold somewhere around like 550,000 Bitcoins. And just to give you a comparison, just to give you an idea, MicroStrategy, we hear a lot about MicroStrategy. They only hold somewhere around like 150,000. And then we have the news about Mt. Gox also. If you guys have been in this space for quite some time, you would have heard this name already. They're also thinking about paying back to investors. There was this hack that happened somewhere around like 2014, 2015, in which majority of the people who had invested in bitcoins, it was an exchange. It was basically an exchange like Binance. It got hacked, and the majority of the people who were holding Bitcoin at that time, they got locked out of their assets. So, Mt. Gox, they're also thinking about paying back their, paying back their customers. It could happen in next 2 weeks. It could happen next few months. Majority of the people are expecting that they will start somewhere on like April 2024, and they also just idea they also hold somewhere around like $140,000 bit. Okay, so a lot of selling pressure could be coming. So you've already been prepared for it. The level that I'm actually looking at, just talking about the news and all these things, we would be talking about the chart part also. The level that I'm basically looking at is $34,500 region. Since the major liquidation event will be happening. Okay, now let's talk about this complete and let's basically dissect all the things that happened here. So basically, starting from 10th of November 2023, I would be explaining to you as from my perspective, that what exactly was happening. So starting from 10th of November, we had a huge, basically we were getting rejected from 38.5K resistance movement. And finally, we broke above this area. We had a major breakout. Those, I'm not a breakout trader. I'm not someone who trades bounces or rejections. I'm always waiting for the retest. Okay. So, majority of the people who breakout traders, they got failed at this. And then we finally started getting rejected from $44,500 region. Okay. So, but the point is that if you would look at this dump right here, if you would look at this major pullback that happened on 11th of December and 3rd of January, you would find a lot of similarities in between. So if you focus on this area around here, when we broke above $38,500 resistance, there were not major imbalances there. I did explain this in detail in one of my updates also, that whenever you have huge imbalances, some people like to call it imbalance, some people like to call it fair value gaps. It's completely up to you. Some people don't even believe in this. They say that the fair value gaps or the imbalances they don't work. You can argue on this. I do have a few arguments on why do they work, but let's not get into the details of that. The price when it broke above $38,500 region, there were absolutely no imbalances left behind by the price. But if you would look at this area around here, when when we broke above $45,000, $44,500 resistance, this resistance area, did warn majority of the people that this retest, which is about to happen, has newly created $44,500 support. It may not just hold. Again, the reason was because prices left a lot many imbalances left behind. Okay, there were a lot many imbalances left behind by price. So if you would look at this breakout, there were not great imbalances left behind. The only amount of imbalances, the only amount of fair value gaps, even on the higher time frame that were left behind by the price, they were somewhere around like $14,400 region. And this is exactly the reason that we had, the price had a major sort of pullback on 11th of December, and all these imbalances that were basically somewhere around in this region, they were filled out by the price. Okay, okay, now let's talk about, and then we started getting rejected of $24,500 region. They were like one rejection, two rejections, three rejections, and finally we broke above this area. Now, this is something that we in technical terms we call deviation also. So, if you are someone who says that, just let me say that, even if it's support or resistance, even if it's trend line, even if it's chart pattern or equal high or equal lows or any other thing, I'm not going to trade the breakouts. I'm not going to trade the rejections or the bounces. I will simply wait for the retest. So, even if you are someone who only trades retest, you should be very careful of what exactly is happening here. This is something that we call deviation, right? This is something that we call V-shaped recovery also. So this is also a V-shaped recovery, but it did not happen below the support area. So this deviation that we are looking right here, there are a couple different, when we were trading above $44,500 resistance, there were a couple different reasons that you should have been aware of why you should not really be going long at this newly created support area. The first one was that there was a major liquidation event at the $40,500 region. And this thing we are talking about on 3rd of January 2024. And I remember that day, we had this huge sort of pullback. Majority of the altcoins we had pullback anywhere from 30% to 40%. And at that time, we have this headline dropping in. And since the crypto market, it is a relatively volatile market and relatively immature market also. So we had this news from a very lesser known channel dropping in. And I was actually explaining to people how these market makers actually work. So we had this news dropping in, and the headline said that the ETF, it's not going to get approved in the quarter one. It is possibly going to get approved in quarter two. And majority of the investors, they should be looking to buy Bitcoin from $36,000 to $35,000 region. Now imagine what sort of a headline is this, it's relatively just easy to drop a headline and then manipulate the whole market. And as soon as this headline dropped in, this whole ETF bubble it got burst, and then people were like, okay, maybe I just bought high, okay. And I just want to discuss this statement also. Majority of the times you would hear people saying that, okay, just buy the fear and sell the news. So majority at the time they were buying somewhere around in this area. And you would know that at that time the greed was right on the top. And they were saying that the people, they were basically buying the greed, but they were saying that, okay, we are buying the fear. Somebody who bought here, the market makers who bought here, or the intelligent investors who bought it, they were basically buying the fear because they knew that, okay, this whole ETF thing, ETF denial thing, it's not going to happen. Okay, so they were basically buying the fear when the whole market it was fearful that, okay, we should be looking at $35,000 to $36,000 region now to buy. Now it was a sort of ridiculous headline at that time. Somebody, a news channel is basically telling you to buy at 36,000 or $35,000 region. What these news channels have got to do with technical analysis or any sort of analysis? So they are basically telling you that you should be buying at this area. So again, it got proved that it was basically a fake news, and that is how billions of dollars just got wiped out of the market in a matter of few minutes. So in this reason, majority of the time people were saying when we were trading at $41,000, $42,000, $43,000, they were basically saying that, okay, we are buying the rumor and we would be selling the news. As soon as ETF gets approved, we would sell it and we are basically buying the rumor. And I keep telling people that, okay, the BlackRock filed the application for spot ETF like 8 to 9 months ago. So since June, we knew that, it was all over the news that BlackRock basically filed the spot ETF application. You had all the time in the world. You had basically 7 to 8 months to buy the rumor. Why exactly are you buying at this moment and saying that, okay, I'm buying the rumor? You are not buying the rumor. If you are someone who invested anywhere above $38,000, you were basically just buying. You were not buying the rumor. You were basically buying the news. Because the moment we broke above $38,000, it was all over the news that the ETF is going to get approved. The majority of the people were anticipating this. This was the most prized in event also. So the majority knew that ETF is going to get approved. So you were basically not buying the rumor, you were basically buying the news. And this is what exactly happened. And then, this major part of the selling, it could be attributed to the GBTC shares, the FTX, and the majority of the people. Now, another important thing is that, the GBTC shares back in 2022, when we were trading at $20,000, they were at minus 50% discount. So currently they are at 0% discount. So majority of the people who had invested in GBTC, they were basically trying to redeem their assets, and they would basically try to book their profits. Obviously, if you were someone who bought at like $20,000 and you are getting the price somewhere around $45,000, $48,000, you would obviously be looking to sell. And this is what exactly happened. And this is what exactly FTX did also. They basically tried to liquidate their assets, and they had basically filed this application in a court that they would want their assets in US dollars, which is obviously most stable currency. They did not want to hold their assets in Bitcoin. So let's talk about the chart part. Okay, so this is something that I was talking about, this deviation part. There are a couple of different things. Whenever you are someone who's trading the retest, whenever you are someone who's trading the retest of newly created levels, there are a couple of different aspects that you should be careful. The first one says that you must be, for example, you want to take a long position right here, you must be looking at what exactly happened when we had this breakout. So as soon as this breakout happened, unlike this one, you can see that there are huge amount of imbalances left behind by the price. When this breakout happened above $38,500 region, the only amount of imbalances left were at somewhere around $40,500 region, which got filled very aggressively. Okay, so this was your first hint that, okay, price actually broke above this resistance area. Now it's a support. Okay, but the fact here is that there are huge amount of imbalances left behind by the price. Now you would see all sorts of people, the breakout traders, they would say that, okay, this there was a huge amount of volume in region, and if it consolidates, then it is basically telling me that the buyers, they tried to push the price above this resistance region. There was selling pressure coming in. The buyers tried to push above this resistance region first time, second time, third time, fourth time. They failed. Okay, and finally they broke above this resistance region. And if this buying pressure, it is legitimate, if the buyers, they are completely in control, if the buying pressure is basically outpacing selling pressure, then they should not just be able to break the price above a resistance region, but they should also be able to keep the price sustained above a resistance region. Similar is the case with, whenever the price breaks below a resistance region, then I am anticipating the fact I do not want a huge recovery happening. And this is something that you would call a recovery. This is sort of a recovery for sellers, in which you have a V-shaped recovery, in which you have a sort of deviation, and there are huge amount of imbalances left behind by the price, and there is no consolidation happening. The consolidation should have told you that this is something that looks like a consolidation, this is something that looks like a consolidation. So consolidation is basically telling you that the buyers, they did not just break above this resistance region, but they're also able to keep the price stable above, they're also able to keep the price sustained above this resistance region, which means that they're actually outpacing the sellers, and this move, it is legitimate. But there were all the good things missing in this move, and as you can see, the imbalances left behind, no consolidation, there was an immediate recovery, and then the final nail in the coffin, I would say, that was this huge amount of aggressive selling pressure coming in. So this is a very important lesson for all of you. Whenever you are whenever you are trading in newly created level, be it support or be it resistance, be aware of this thing. You do not, for example, you're wanting to trade this newly created support level, you wouldn't want an aggressive selling taking place towards this newly created area. Or for example, if you are someone who's trading a resistance, for example, I want to take a short trade at this resistance area, I wouldn't really want a huge ass green candle moving towards this newly created resistance region, because in that case, it's not only showing a recovery made, but it's also showing that I could just get wiped out in this bull move, right? So in this case, you know even if you are trading a support in newly created support region, or even if you are someone who's trading a newly created resistance region, you must be aware of the fact that you are always taking care of this aggressive selling taking place or aggressive buying taking place. In this case also, you can see that if somebody wanted to take a long position at this area, they should have been aware of the fact that there is a huge aggressive selling taking place, there is a huge sell off taking place, and I would not want to take a long position in the face of this. The second important thing is that, okay, so finally we broke above this area. Sorry, we finally broke above this area, and then we had a sort of deviation playing out. We came back in, consolidated a little bit, and then we had this breakout. This was a much more sustained breakout. We did give this first retest, and that is exactly the same reason I'm always telling people that the first retest, it's always your single best opportunity to take a long or a short trade. By the time you have second retest, your chances of winning, they might have reduced to 65%, and by the time you have third retest, your chances of winning again, they reduce to probably like around 50%, and you should not be going with a 50% probability of winning. And then you have this huge sell off taking place. This was the first retest of this area, and then we finally broke below. We had a breakdown again of $44,500 region, and we had this 50% demand area playing out. Now I have this thing marked on my chart all the time. As you can see, this was the 50% demand area that I had marked. The price came back to fill this one. We had this aggressive move, came back to fill this one back again. Then we had this huge impulsive move towards the upside. Majority of the times people are asking me that, how did you exactly mark these 50% demand and supply regions? So this is not something that I learned anywhere from YouTube or from any mentor. I basically discovered it myself, just by looking at the charts. So I would be explaining to you. This is extremely simple. So every time you see these huge wicks happening on the chart, and by the way, I'm not someone who's scalping. I'm not looking anywhere from 1 hour chart or 5 minute chart or 1 minute chart. I'm never really dropping below the 4 hour chart. The higher time frame you go, the remember this thing. There's a term called noise lag trade-off. Okay, so you would have to choose either you want to trade noise or either you want to trade lag. Okay, so the higher time frame you go, the more noise. The higher time frame you go, the lesser amount of noise it has. The lower time frame you go, the more amount of noise it has. So 1 minute time frame, it would contain a lot more noise compared to, let's say, a 4 hour time frame chart or a daily chart. Okay, so the higher time frame you go, the lesser amount of noise it has. The lower time frame you go, the more amount of noise it has. But at the same time, the higher time frame you go, the more amount of lag it has. But the lower time frame you go, the lesser amount of lag it has. Now, the reason why I'm always encouraging people and I'm always telling people that you should be trading the higher time frame, and this is again from logic that you should be trading the higher time frame. It's because none of the confluences in my strategy, and if time permits, I would be mentioning to you the confluences also that I personally use. None of the confluences that I personally use in my strategy, they are dependent on any sort of lag. And what do we exactly mean by lag? Let's say that we are someone, and if you're an absolute beginner into the market, you might have heard about the EMA crossover strategy. Probably one of the most bullshit thing that I've ever heard of. Okay, so EMA crossover strategy, it's all over YouTube, it's all over, and I have, by the way, seen many intelligent people who have invested like a couple years in the market. They be talking about death cross and the bullish cross and the bearish crosses. So every time, basically it's again, it's an absolute bullshit strategy. I do not want you guys to use it. I'm just explaining it for educational purposes, that as per the this strategy, every time the 50 period exponential moving average crosses upwards the 200 period exponential moving average, you should be taking a long trade. And by the way, if you're curious enough, you can just go to your charts and apply this and see that how pathetic this thing is. So every time it crosses upwards, you should be taking a long position. Every time it crosses downwards, you should be taking a short position. If it crosses upwards, it's called golden cross. If it crosses downwards, it is called a death cross. Okay, so uh, if you would look at, for example, if you're looking at a day, you would see that these moving averages, they would be crossing probably at so for example, if you're looking at the 1 minute chart, you would be seeing that this EMA crossover probably is happening at 10 a.m. on 24th of January 2024. But if you would be looking at the daily chart and wait for this EMA crossover to happen, it may not happen in the next 3 years. So the lower time frame you go, the more amount of the lesser amount of lag it has. Okay, and the higher time frame you go, the more amount of lag it has. But I'm always encouraging people that you should never be dependent on any sort of strategy that is basically dependent on lag. Majority of the times, whenever you are using technical indicators, they do depend on lag. They would basically get the data is input. They would basically do some calculations. The reason I'm always telling people that you should not be using any sort of technical indicators, it's because these indicators, they are absolutely nothing but simply a mathematical formula. Okay, they are meant to be used in the true essence. Okay, for example, you are using EMAs, do not rely on the EMA crossovers, but actually use it in its true essence. Average is such an important concept in a day-to-day lives also. I do not want to mention this, but if somebody asks you what exactly is average salary, what exactly is the average salary for this profession, what exactly was the average result for this class, so every time in a day-to-day lives you are talking about averages. Okay, averages are providing us some sort of threshold. Okay, they are basically acting as a dynamic support to resistance area, or as a basically threshold. So that is how they are meant to be used, not as an EMA crossovers, bullish crosses or bearish crosses. So the lower time frame you go, the conclusion was that this noise lag trade-off thing is telling us that the lower time frame you go, the more amount of noise it has, but the lesser amount of lag it has. The higher time frame you go, the more amount of lag it has, but the lesser amount of noise it has. And none of the confluences in my strategy and none of the confluences in your strategy should be dependent on any sort of lag. Okay, you should not be using any sort of technical indicators to generate buy and sell signals for you. So that is why I'm always preferring, and if you are someone, if you're an intelligent investor, you should not be ever you should not be trading noise, because noise, it would literally blur your vision. Okay, so every time you're trading the 1 minute chart, 5 minute chart, 15-minute chart, it's literally just giving you nothing but simply noise. It's basically showing you a lot of emotions of the people. Whenever you are going to the higher time frame daily chart, people are always saying that, okay, if I draw, you might have heard this statement that the lower time frame you go, the higher time frame you go, the more legitimate these things are going to become. For example, support, resistance, trend lines, etc. It's a very important statement. It's a very common statement also, and a true statement also. The higher time frame you go, the more authentic support, resistance, or trend lines become. But again, it's a very subjective questions also. The support or resistance that you draw on a 1 minute time frame, it may literally take 10 minutes to break, and then people be complaining that, okay, why did this support and resistance I drew on 1 minute time frame chart or 5 minute time frame chart, it did not hold, price did not hold above this area. You need to understand that if you draw support and resistance on a daily chart, and it takes 15 minutes for price to break below 15 days for price to break below that region. It's literally taking the 15 minutes time. 15 times 15 multiplied by 1 day, it's like 15 days. Similarly is the case with the 1 minute chart also. If your drawn support or resistance, so the 1 minute time frame chart breaks in next 15 minutes, it's literally taking the same amount of time. Again, it's a subjective question, but the reason is that the 15 minutes, it may not sound like a more time for you, but in comparison to 1 minute, it's 15 times, right? So that is why these supports, resistances, and trend lines, etc., drawn on the lower time frame charts, they may not actually hold that much of worth. Okay, so that is how you should be very careful of that. Okay, so finally, we were talking about the ETF thing, that it was basically a sell the news event, and how exactly we just broke below these regions. We had a sort of consolidation, and then price had some sort of support finding at this 50% demand region. Okay, now let's talk about this 50% demand and supply, that how actually we can draw this. So every time you see huge wicks happening on the chart, and again I'm talking about the higher time frame chart, and I consider 4 hour all the way up to the weekly or the monthly chart, the higher time frame chart. So every time you see these huge wicks happening on the chart, what you can do is that you can use the Gann box, you can use the Fibonacci tool, you can use the rectangle tool, any sort of tool that you would like to use. You can simply use these tools and mark the 50% of this wick area. Okay, you can use an indicator also. I would share the link of the indicator with you guys as well, or you can simply go to the indicators tab and search for something like VIX percentages. Okay, and it should give you an idea every time. And by the way, this is for if you're wondering that what sort of candles that I need to consider. Every time a candle's wick is greater than 60% of the candle's body. It's very obvious looking at the charts also. For example, in this case, I can basically looking at this wick tell that this wick area in comparison to the body, in comparison to the whole ratio, it is greater than 60%, right? And similar is the case here also. So every time you see these sorts of wicks happening on the chart, all you have to do is just using any sort of simple tool, you can mark the 50% of these wicks, and they should be working as supply demand region. But here's the catch, okay? One thing that you need to consider also is that as soon as these wicks are created, now, first of all, what exactly are these huge wicks indicating? Okay, first of all, let's talk about this one area. As soon as we drop to 40,000 region on 11th, on 3rd of January 2024, we had the huge buyback happening, which means that someone who dropped this news intentionally, who had incentive, dropping this news, who had probably vested in interest in dropping this news, who wanted to have the buying pressure absorbed in. And in case you are wondering about the fact, what exactly do I mean by saying that, they want to have the buying pressure absorbed in? All of these markets, all of these financial markets, be it stock market, be it the crypto market, and things are slightly different in crypto market because we have blockchain and smart contracts. We could have a lecture on smart contracts as well. They work slightly different, in a slightly different manner. But the thing is that the majority of these markets and majority of these financial markets, they are basically working on a simple order book model, in which, just to explain it as simplest possible terms, in which you have buyers at one side and then you have sellers at one side. So if you want to buy $50,000 worth of Bitcoin at $50,000, if you want to buy $50,000 worth of Bitcoin at $50,000 price, then there must be someone selling $50,000 worth of Bitcoin at the $50,000 price. And only if it happens, only if the buyers match the buying pressure matches the selling pressure, only then an order would be executed. Okay, and this is in terms of the limit orders. Okay, so whenever you are placing the limit orders, you are basically telling the exchange that, okay, I want to buy this much amount of Bitcoin at $50,000 worth, $50,000 price. And that is why you would have seen that with the limit orders, you may get your order filled or you may not get your order filled. Okay, this is with the limit orders. So, limit orders, they are basically ensuring that you would get filled at $50,000 price, but they are not ensuring you a complete fill. Now, this is exactly the opposite with the market orders as well. I'm basically trying to explain the psychology behind these ways. So, with the market orders, whenever you press the market buy or the market sell buttons, you are basically taking the liquidity out of the market. Okay, so this is also called a sort of taker orders. There are taker orders and there are maker orders. So, in the case of a market order, you are telling the exchange that I want to buy $50,000 worth of Bitcoin, and I want my order getting filled immediately. I don't care about if it's filled at $50,000, if it's filled at $51,000, if it's filled at $52,000. And considering that, it really depends on a lot of different factors. For example, which exchange you are trading on and which asset you are trading on. For example, the exchange, they may have thin liquidity or they may have deep liquidity, or the asset that you are basically trying to trade. And that is why people are always encouraging not to trade the assets with thin liquidity, with the thin order books. The order book that may not have enough liquidity in order to absorb your order. Okay, it really depends on how much liquidity do you have. Binance, it has this highest, they have the highest amount of trading volume, so you could have your orders easily executed on Binance. But sometimes when you are trading with a big enough capital, even in the most liquid asset on Binance, on the most liquid exchange, that is Binance, you may not get your order executed. Okay, this is absolute simple psychology, because you want to, when you are executing the market buy or market sell order, you are telling the exchange that all I care about is my order getting filled. I do not care about the fact that if it gets filled at $50,000 or at $51,000 or at $52,000. The reason that it never happens to you, the reason that as soon as you push the market buy or market sell button, your order gets executed immediately at the very same price, is because number one, you are trading a very liquid asset. Number two, you are trading on a very liquid exchange. Number three, you are trading with a small enough capital. So if you were someone who was not in any of these, who may not fall in any of these options, who was not trading on liquid enough exchange, who was not trading a liquid enough asset, or who was not trading with a small enough capital, then you might be in trouble. So bigger the capital, bigger the responsibility. Majority of the times people are complaining that, okay, only if I had like $200,000, I could have made large amounts of profits. But you must also remember that the bigger the amount of capital, the bigger the responsibility also. So you may face a lot many issues trading with a bigger amount of capital. Those cases, you cannot press the market buy or the market sell button. And it's very simple, because for example, you just told the exchange, you just gave the exchange incentive that I just want my order getting filled. I don't care where exactly it gets filled. So it would see that are there this guy wants to buy immediately. Immediately, this guy wants to buy $50,000 worth of Bitcoin at $50,000 price. And if there are no sellers on the opposite side selling this much worth of Bitcoin at $50,000 price, it would look at $51,000. Then it would look at $52,000. Then it would look at $53,000. Because that algorithm, because you push the market buy, market sell button, the algorithm only cares about the fact that it wants to fill your order at a lightning speed. Okay, and this would be happening just in a matter of like nanoseconds or milliseconds. So as soon as you push the button, and if a big enough capital, and you push the market buy or market sell button, and if there are not enough sellers present on the opposite side, so your order, it may get filled on $55,000, even though you push the market buy or market sell button at $50,000 price. And that is how you would see these huge wicks happening on the market. Okay, so in this case, there are a lot many other factors also, and that is why you should be avoiding, if you're trading with a big enough capital, you should be avoiding doing the market orders, because they could be really risky. Okay, especially in cases where the asset is not liquid enough or the exchange is not liquid enough. So these wicks, for example, this wick right here, it is indicating to you that there is a huge amount of buying pressure coming in from this area. There is a huge amount of demand present in this region. Okay, so what you can do is that I said that you need to mark the 50% of this demand region. The second thing that you need to actually notice is that after the creation of this demand area, price is moving in the upward direction also. So I don't just want price giving me a huge wick towards the downside, indicating that there is a huge demand present in this region, but I also want the price to give a sort of buyback happening in the upward direction also. The opposite is true for the supply regions. So, for example, if this huge supply wick is being created, I do not just want this wick being created. I just cannot start selling at this area, or I just cannot start selling immediately. I would want the price reacting to this supply also. And by that, I mean, as soon as this supply is being created, I want the price moving at a downward direction. And this is exactly this. This showed that there was such a huge amount of supply present in this region that it pushed the price in the downward direction. And similar is the case with the opposite is the case with the demand region. And after this move has happened, after a smaller move has happened, it could be a few $1,000s, it could be a few cents. It really depends on what coin you are trading. But I would basically want to see that this demand is acting. in a good manner. Okay, and this is what exactly we saw here. And as soon as it happens, I would basically mark the 50% of this wick, and I would simply wait for the price to come back to this region. The pico 50% region, the exact 50% region I would want for the price to come back, and then I would take a long position. As you can see, this 50% demand that got created on 11th of December pullback, price returned back to this exactly on 18th of December, and the demand got created and price reacted in a positive manner to that demand, which means that there was definitely a buying pressure present in this area. And as you can see, the pullback that happened on 3rd of January, it was exactly at this 50% demand back again. And then we had this huge sort of impulsive moving towards the upside. This one also reacted positively, although we did not got a huge enough move thanks to FTX, thanks to Grayscale, thanks to all those things. So, these demand and supply zones, they work a lot many times. Every single person, they could have a different interpretation of demand supply zone. This is my personal interpretation of demand supply zones. This is my personal strategy based on demand supply zone. So, looking at the current scenario, we are basically just bouncing off $38,500 region. We are getting rejected from $40,500 region. This is your smaller range to play out, and the bigger range, obviously, the upper ceiling is at $44,500 region. In my opinion, we should be going back to $34,500 region, because there is a big liquidation event. And I have been saying this ever since we were trading at, 44,000, 45,000. that, there's a great possibility that we'll go back, retest the $33,000, $34,000 regions, and then we might see, the bigger sorts of waves playing out. And by the way, if you would talk about this, if you would like to talk about this in terms of waves, then we would have to go to the higher time frame, for example, looking at a 12-hour time frame, removing all the noise. Okay, this is what exactly I mean by noise. The higher time frame you go, the things become more clear to you. So in this case, you can see that huge impulsive wave, this pullback wave. Okay, so this was a huge impulsive wave, this was a pullback wave, this was impulsive wave, this was a pullback wave, and this was impulsive wave back again. Okay, this is extremely simple. This is an extremely simple structure of an uptrend. So every time you have an uptrend, the price should be making higher highs and higher lows. I know you might have heard about this, but the important fact here is this is the resistance regions in a in an uptrend, and this is the support region in a downtrend. So every time the price is making higher highs and higher lows, which means that every high created is higher than the previous high, and every low being created is higher than the previous low, then this would mean that, okay, price is moving in an uptrend. But also, this is something that you should be looking at. This is something that should serve as a resistance region. So every time price breaks above the previous high, you know that, okay, the buyers, they are in complete control, and price is breaking above the resistance region. Let me just explain this to you in a very simple and easy manner. Okay, let's say the price is making this huge impulsive move towards the upside. Okay, and then you see some sort of rejection here, which means that the sellers, they are interested in this region and they want to push the price in a downward direction. But then the buyers step in. So at this point, the buyers step in, and at this area, the sellers stepped in. So the sellers are trying to push the price in a downward direction. The buyers, they want to keep pushing the price in upward direction. What happens at the end, that the price is able to break above the last high. This was the last high, right? So this would indicate that, okay, because the price broke above the previous high, which was basically, which was basically the regions where the selling pressure started coming, that the buying outpace the selling pressure. So we are in an uptrend. That is how we say that we are in an uptrend. So similar is the case here as well. Every time price breaks above the previous highs, we say that, okay, we are in an uptrend. But if at any case, I would be explaining this to you in context of Bitcoin also. Anytime price, instead of creating a higher low and higher highs, just breaks below the previous low. Now, this is, as I told you, this is a sort of this is sort of support area. In an uptrend, this is resistance. The high is a resistance and the low is a support. So anytime price breaks below the previous low, instead of creating a higher low, it prints a lower low, then you would say that, okay, the market structure shift has happened and the market has shifted from an uptrend to a downtrend. Okay. Now, the reason this is also important in terms of Bitcoin is because, as you can see, we have this impulsive wave, retracement wave, and then impulsive wave. And by the way, I do not consider VIX as a valid break of, as a valid market structure shift. So as soon, this low right here at $40,200 region, this low was extremely important, okay? Because as you can see right here also, in an uptrend, these lows, they must be protected. Anytime price breaks below the previous low, you must be very aware of the fact that okay, the uptrend has shifted into a downtrend. Similar is the case here as well. As soon as we broke below this low right here at $40,200 region, you should have been very careful that okay, now we are going definitely going back to $38,000 region. Okay, because we just broke below the previous low. And now for the time being, I should be saying that as long as we were sitting above $40,200 region, we were definitely very much bullish. But as soon as we broke below 40,500, and yeah, the important fact is you are basically lying right at the support also. Okay, this is also something that you need to consider. You cannot say that okay, now that we broke below this support, now that we broke below this low right here at $40,200 region, now we're just going back to 20K. No, you cannot say that because this is the next support area. Now I have seen majority of the time people saying that okay, let's take a short position right here. Let's take a short position right here and set my TP. Short position right here. This is my stop loss and my TP at this area. Okay, but just for the sake of having a good risk to reward ratio being displayed on your chart, why would you do that? The next support is lying right here. Okay, even though we are bearish, even though we broke below this area and the whole market structure shift, it has changed for the time being, but this still is a support, right? This still is a legitimate support, and as we saw, that price gave a nice reaction at this support also. So support is a support as long as the price does not break below, and the resistance is a resistance as long as price does not break above. So in this case also, if you try to short here, or if you are trying to short here, this is not a very good short position, looking at all the other conferences, but you can try taking a very small short position at $40,500 region, and then you can simply target this area at, 30,000, $38,500 region, because this is an obvious amount of support. This is, by the way, first retest. As soon as we broke below the first retest, it always holds the most amount of worth and most amount of importance also. Similar was the case with this retest also. So we are basically moving in this range, 38,500 to 40,500. And remember that, if this range has to play for some time, the bigger the move would be in a, in near future. So the prices, they cannot basically stay compressed for a longer enough time, right? You would have to see some sort of distribution also happening. So in this case, if the prices, if this range plays out, indeed, I pray that it does not, because this is an extremely tight range. If this range plays out, then you could see a huge move happening, and there are all the chances that this move could be in a downward direction, because I do not see a lot many confluences at this area, at the the $38,500 region. Again, as I said this in the very beginning of the live stream also, this is a very important support area, because price took quite some time to break above this resistance region when it happened on, like, 1st of December 2023. But if you talk about the VWAP, if you talk about the exponential moving averages, etc., they are not quite present right here. Okay, so you should be cautious taking a long position in this area. You should be looking to buy somewhere around like 34,000. This is not a sort of financial this is not a sort of financial advice. All sorts of financial advice in my channel. So if you're not a premium member, you can just simply subscribe there. Okay, let's take some questions. Do we have any question, related to the things that we talked about today? By the way, we would be having, the similar sort of classes. This was just the beginning. We would be having the same sort of classes in the every single week. So if you have any questions, and I hope these lectures are also recorded, so you guys can access the recordings as well. If you have
Yeah.
any questions, if you are someone who's yeah, if you're someone who's present live in the lecture, you can just ask the question right here. And even if you're watching the recording, just make sure to ping me in the crypto chart or whatever the chart channel is. I would try to get back to you as soon as possible. Kenny, he has a great server. Make sure to just attend these live lectures also, because they are a sort of great opportunity for all of you. Just to benefit, because trust me with that. any these sort of lessons, they would be costing you somewhere around like $3,000, $5,000. The
Yep.
concepts that I would
That's
be teaching to you, they would be costing you a lot much amount of money. So you should be, and if all of these things are available to you for free, then you should be, really paying attention to all this.
tell them, Sherlock,
Over
man.
to you,
Some
Kenny.
people pay a lot of money for classes like this to learn, even just for to have somebody spread a chart in front of them and explain it. Let alone, go into
Exactly.
details into complex strategies like we'll be going to. So, yeah, man.
Exactly.
But give these guys some
I
time to warm
personally
up,
use.
man. Keep doing this every week.
Mhm,
We'll keep building the classes. I'll keep
mhm.
working on getting more guys in here. But that was a great class, man. Thank you. I really appreciate
Yeah.
everything you did, brother.
Thank you so much. Thank you so much, Kenny. You have a great server. Thank you so much for all those who joined. And again, if you have any questions, you can simply ask that in the chat channel. I will try to get back to you as soon as possible. And thank you so much. See you guys next week. Take care. Bye bye.
Yes, sir. Take care, Sherlock. Thank you again. All right.
Thank you.
Peace out, brother.